Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here in studio at the Stock Exchange. We do see equities a little change this morning after the S&P 500 and Dow Jones Industrial Average hit new records on Tuesday. Well, investors have been adding to their positions to start this new year. Optimism over earnings growth and rate cuts amid the expectation of contained inflation are behind the gains. Earlier this morning, ADP released its private payrolls data from the month of December, showing that private employers added 41,000 jobs last month. That was a little bit below economists' estimate of 48,000. Now, this Friday, the Bureau of Labor Statistics will release the December jobs report ahead of the market open. Let's take a look at what's on tap this hour. CES 2026 kicked off from Las Vegas on Tuesday, and NYSE-listed Oshkosh is already generating buzz. The company was recognized for its tech leadership and is showcasing its latest innovations. Its CEO, John Pfeiffer, will join me live to share the details at a time when its stock is at a new high. Plus, another NYSE-listed firm, that's Spotify, just announced a fresh milestone. Jordan Newman, the company's head of content partnerships, will tell us how it is reaching new levels of success by utilizing the creator economy. Then at 9:30 a.m. Eastern, we'll take you live to that opening bell podium where Coastal South Bank Shares is set to open equity markets, here to celebrate its recent uplisting to the NYSE. CEO and President Stephen Stone is going to join me on the floor later this hour to unveil its game plan for 2026. Let's start with the markets, as we always do. We are still amid this first full trading week of 2026. And so far, what worked in 2025 seems to be what's working in 2026. Joining me now with more is Michael Rankin, Senior Market Strategist for the New York Stock Exchange. Michael, good morning.
Good morning. Thanks for having me, and Happy New Year.
Happy New Year. Great to have you on the show. How is this new year setting up from your viewpoint?
Yeah, so I mean, look, we're off to a very solid start. We have 3 consecutive days of gains for equity markets. You know, we're kind of setting fresh record highs. You know, the Dow Jones Industrial Average is about 1% away from 50,000, right? That big kind of round milestone mark, right? And we've seen kind of very solid performance. Kind of a broadening of the tape that kind of a lot of people have been hoping for. We started to see signs of that in Q4 of last year, right? And we have a pretty positive setup. So if you think about kind of the backdrop, we have the fiscal impact of some of the administration's policy shifts that we saw last year are going to start to start to impact the economy as we head into this year. We're looking at kind of mid-double-digit earnings expectations growth for kind of mid, small, and large cap companies, right? So you have a very positive earnings backdrop, and you have the Federal Reserve, as you pointed out, kind of also cutting rates at the end of last year, and you'll start to see the lagged kind of impact of the rate cuts that we've seen over the last year and a half start to impact the economy.
Let's drill down on these rate cuts a bit. So the Fed, we know, has a dual mandate, maximum employment and contained inflation. And this week we already have gotten a look at the employment picture, but that non-farm payrolls report on Friday usually does take all of the headlines. How is the jobs picture looking to you? Yeah,
so I mean, we've clearly seen a slowing in hiring, right? But we're also not seeing kind of these large layoffs, right? So it's kind of this low hiring, low firing, kind of sort of backdrop. We'll have to see how that progresses. We didn't see, right, with the government shutdown, right, a lot of that data is still going to be a little bit sloppy as we look forward. This morning's ADP report, right, showed an increase of 41,000 jobs. Notably within that, if you remember back in November, there were very, very big declines in small businesses where they cut 120,000 jobs. That bounced all the way back this month, right? So that's a positive. We did see a little bit of a moderation in hiring, kind of in large businesses, right? But, at this point, if you believe in this idea that you're going to see a reacceleration of the economy, that should also ultimately help the labor market as well.
Okay, 2025 trades, technology did lead the way most of the time, despite some profit taking at the end of the year. 2026, do you expect the same theme?
Well, so look, I think, you can't really get away from the AI theme, right? And it's such a big driver, of U.S. markets particularly, but it's also, as you can see in just the performance to start this year, it's a very big driver in pockets of Asia as well. And if you look at kind of how Hong Kong and the Kospi in Korea and South Korea and Japan have performed to start this year, right? You're still seeing a lot of strength, kind of related to that tech trade. So I don't think that tech trade is going to go away, right? I think you're already starting to see that trade kind of evolve, right? Where with kind of the Alphabet's or Google's TPUs kind of bursting onto the scene, right, and showing some competition to NVIDIA. Markets are trying to search out kind of the winners and losers, kind of within the infrastructure and kind of the supply chain within technology, trying to figure out those winners and losers. But I think it's going to evolve even beyond that, where markets are going to really look to see kind of companies implementing the technology, showing how that's increasing productivity and helping kind of the bottom line.
I do want to talk about the Consumer Electronics Show currently underway in Las Vegas, and we've seen headliners at this event like AMD's Lisa Su, NVIDIA's Jensen Huang. We're going to be speaking with Oshkosh in just a moment here after it took home several innovation awards from CES as we get started this year. Big picture, what matters at CES?
Yeah, look, I mean, it's an exciting time, right? It also happens kind of at a point where we're ahead of earnings season, kind of within the U.S. equity markets, right? So, it does capture a lot of attention. Well, we heard from kind of the big heavy hitters within the tech industry, kind of on giving their keynotes on opening night. Jensen Huang, kind of unveiled the new Vera Rubin, right? There's a lot of focus on autonomous driving, right? Robotics, right? My son will be very excited. They have smart bricks coming from Lego, right? So, he'll be excited about that. It's an exciting time. You continue to see, just kind of this innovation that's, kind of happening within technology, and how AI and is starting to also impact kind of the physical, aspects of AI.
Seasonal's always something that we talk about here in January, whether it's the Santa Claus rally, the first 5 days, or even the full month of January. How is that shaping up?
Exactly. So those three indicators kind of make up the January indicator trifecta, right? And so the Santa Claus rally just wrapped up, or kind of the Santa Claus rally, kind of that measurement period just wrapped up on Monday, right? The S&P 500 ended a couple points lower. The Dow did end higher, but of the three indicators, that does kind of tend to be the least good for predictive, kind of how markets kind of perform in the year ahead. This is the third consecutive year where the S&P 500 ended lower, and if you think back to just the last 2 years, right, we had pretty solid gains. Now, the first 5 days, we've started off the year with very strong gains across the markets. We're up for 3 consecutive days. We'll see how today shapes out. So, the first 5 days looking pretty solid, but I think that, the most indicative is kind of how January tends to play out, right? And if you look at, that first 5 days in January, when you have, those indicators are higher, equity markets tend to be higher, kind of in the double-digit range, and up a little over 80% of the time. So they are, have been pretty good, kind of predictive, kind of in signals of how the rest of the year might play out.
Quickly on volatility, it's something that market watchers have been noting on this show. What is your expectation for volatility this year?
Yeah, it's interesting because we've seen volatility get compressed quite a bit, right? Especially, you had this, kind of vol spike in kind of Q1 of last year, and then kind of on the back end of that, there's really been this compression of volatility, right? There's a lot of headlines that are kind of out there, right? We just saw kind of Venezuela. Markets have largely shrugged off a lot of the geopolitical headlines that we've seen over the last couple of years. We have the IEPA. Kind of Supreme Court ruling potentially on Friday, right? That could cause some volatility. Look, I mean, I think there's some risks out there, but like with this, I think there's a bit of a structural shift in terms of kind of how important kind of retail is, and we're seeing that now in kind of in markets, and as we turn the corner, right, kind of we've seen a lot more retail participation, and that's starting to rival some of that institutional flow, and I think that's something that's going to continue. It's something I listened to Citadel talking about yesterday on a conference call.
All right, Michael Ranking, senior market strategist for the New York Stock Exchange, joining us here as we kick off 2026 in the first full week of trade. Michael, thank you.
Thanks for having me.
All right, everyone, stay with us because up next, Oshkosh is making headlines with its innovative solutions at this year's CES, and its CEO is going to join me from Las Vegas to give us the details.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. CES, which bills itself as the most powerful tech event in the world, is underway in Las Vegas. One NYSE-listed company, Oshkosh, was recognized for its tech leadership, winning the CES 2026 Best of Innovation Award in the robotics and travel and tourism categories. It was also named an honoree in the construction and industrial tech groups. Well, John Pfeiffer, Oshkosh's CEO and president, joins me now with more. John, welcome to the show. Great to see you out there in Las Vegas, and congratulations on these awards.
Yeah, thank you, Kristen. Delighted to be with you this morning.
Wonderful to have you, and give us a sense as to what you're showcasing at this year's CES show.
Yeah, well, sure. Let me start by just kind of orienting everybody about what we do. You know, we're a company that makes heavy-duty vehicles and equipment, but essentially what we are is we serve people and make a difference in the lives of people in our communities. And you see our equipment throughout every community that we all live and work in, and we serve people to deliver them to deliver those everyday heroes to do that tough work with safety and productivity. And we're a technology company as much as we're an industrial company. So we go to work applying autonomous technology, applying AI, applying electrification where it makes sense to help people that are doing the toughest work in our communities to get the job done safer and more efficiently with every day that goes by. So you see a lot of autonomy in our booth. You see a lot of AI in our booth. You see some electrification where electrification makes sense to get jobs done. That's really what we're showcasing at the show.
And investors, John, are buying the story. Your stock was up 6% yesterday, reaching a new all-time high. I see it fractionally up in early trade on Wednesday morning as well. How is this technology advancing in 2026?
Well, we think technology is everything. You know, when all of us hear about data centers, and more data centers because of the advancement in AI, the latest and greatest NVIDIA chips, and that's all really good stuff. What we show and what we do is we take that AI into the physical world, and we show how we're using AI to make airports more efficient with aircraft turns. We show how we're taking it into construction and job sites to help connect and use analytics on job sites to make them more productive, more efficient. So we're really taking that AI that we all hear about and we're bringing it into our communities where it's becoming better for people to get work done and better for all of us who live in all these communities to see it happen more efficiently, more safely than ever before.
Talk to me more about what is happening on the show floor and how you're connecting with clients and consumers at this year's event.
So we've got several exhibits on the show floor. We show, for example, you can see in some of the animation that's happening right now, how we take the aircraft turn at a gate. You know, we all know every day there's thousands and thousands of airplanes that come into gates, and everybody, the airline and all of us passengers want those airplanes to come in and out of those gates as efficiently and as on time as possible. So we're able to apply autonomous functionality to help augment the people that are doing tough work on the ground to get the work done more easily and more efficiently. We're also connecting hundreds of data points at every gate at the airport, which gives us all of the AI capability to understand and predict what's happening at the gate real time so that a gate agent or somebody on the ground knows what they need to do to make sure that that aircraft stays on time as opposed to getting delayed due to something that is unexpected happening.
How will
And you can see these exhibits in our booth. You can see how they come to life, and so that's what we're showcasing at the show.
Our viewers are getting a great sense of this technology and your leadership in this space. John, as we showcase some of these visuals that you referenced earlier, how are these innovations going to benefit your business in 2026?
Well, innovation drives growth for us. And when we're able to continue to innovate for our customers, it drives growth for our company. It drives growth for our shareholders. But more important than that, it drives better outcomes for our customers and better outcomes for the actual people who are doing the work. So, I mean, that's really why it's important.
What does it mean to be honored by CES as a top innovator at this year's show?
You know, it's certainly a nice milestone. It's a nice kind of a signpost to say that, hey, we're doing some of the right things when we get honored with these awards. So we love getting awards from at CES and from the CTA. It's fantastic. The awards we really want to get is we want to get the awards from our customers showing that, hey, this is the right direction that we're taking. And we put a lot of focus on our customers, whether it's the big airlines or it's the many customers that we have in all these end markets. We focus on those people, and if they're happy, then that's the best award that we can get.
John Pfeiffer, Oshkosh's CEO and president, joining us live from Las Vegas as CES 2026 is underway. John, thanks again and congratulations.
Thank you, Kristen.
All right. Well, coming up, Spotify announces a milestone as the creator economy heats up. We will give you those details on this NYSE-listed company as we take a live look of the trading floor.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
when we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this morning, AI Doc announced that Dr. Jesse Ehrenfeld, former president of the American Medical Association, is joining the company as its global chief medical officer. Dr. Jesse Ehrenfeld joins me now with more. Doctor, good morning. Great to see you joining us live from Las Vegas. Bright and early out there, so we appreciate it. Why did you choose to join AI Doc now?
Look, I joined ADOC because while policy is essential, I realized it alone cannot fix the systemic collapse of our profession. The physician shortages, the staggering burnout, and the death by 1,000 clicks that define modern practice. My mission at ADOC is to move us beyond having passive technology to pioneer a new standard of clinical quality and clinical care, patient safety, using AI tools to orchestrate complex care workflows so that we ensure that no critical finding can fall through the cracks, transforming technology into a trusted force multiplier that can protect patients, you, me, my mother, my children, and restore physician capacity.
Well, AI Doc talks about agentic AI, a theme that we hear about a lot here on our show. How is this different from the AI that we already know?
Look, traditional AI is a sensor, but it's sitting in a silo. Agentic AI is a digital conductor that autonomously plans and executes tasks. And if you have a brain bleed, the AI doesn't just wait for a human to find the file, open it, detect it. It identifies the bleed in seconds, autonomously alerts the relevant specialists, like the neurosurgeon, who can solve the problem. And it bridges the gap between imaging, the electronic health record, removing the diagnostic friction that unfortunately typically slows down patient care. And it's a way that you can provide consistent 24/7 safety so that if you show up at 3 a.m., you get the same rapid, high standard diagnostic oversight as somebody who shows up during the peak daylight hours.
What is your primary objective as global CMO of AI Doc?
It's pretty simple. It's to serve as the leading clinical voice for ADOC, bridging the gap between really groundbreaking technology in the global healthcare community. And I'm responsible for shaping and articulating the clinical value of our solutions and establishing ADOC really as the definitive AI partner for health systems. And I'm really excited to partner with policymaking bodies and regulators to help define what are the new guidelines for AI-enabled care pathways to ensure that the medical community is prepared for technology-driven workflow shifts.
How does the AI Doc AIOS platform provide value to healthcare systems?
Look, most of our healthcare systems are seeing positive ROI in 3 to 6 months. They're identifying treatable conditions, they're dropping length of stay. And the platform, AIOS, analyzes and aggregates medical data to help care teams, clinicians, operationalize the unexpected across multiple service lines. So what we've done is we've helped now more than 1,600 hospitals move from having an individual point solution towards having a comprehensive enterprise-wide clinical AI strategy.
How do you address concerns regarding AI safety and clinical rigor in this space?
Well, we've got the most FDA-cleared computer-aided detection solutions on the market today. Our goal is for AI to be a force multiplier for physician capacity, not to distract or become a replacement for human judgment. And to date, we have analyzed over 100 million patient cases. Think about that, reflecting the rigor required to deploy clinical AI safely and at scale.
What's a foundation model, and why do you think it's a game changer for physicians in your company?
Look, foundation models are large-scale AI models trained on vast, diverse data sets that can then be adapted to a whole variety, wide range of downstream tasks, rather than being built for a single specific function. And our model was built on 40 million CT scans. That's more than CT scans done in the entire United States in a year. For physicians, this means moving away from, again, an individual point solution to a comprehensive AI layer that understands the full clinical context of a patient. And so in radiology and beyond, what these models can do is allow us to unlock far more value from medical imaging than was ever imaginable before. We can auto-diagnose critical disease with higher precision. And we recently filed a breakthrough device submission with the FDA for a comprehensive abdomen AI solution powered by our clinical AI reasoning engine, which is going to utilize this foundation model approach.
Dr. Jesse Ehrenfeld, Global Chief Medical Officer at AI Doc, joining us from Las Vegas. Doctor, thank you.
Thank you so much.
All right, viewers, stay with us, because up next, we're going to take you live to that opening bell podium as trading is about to get underway here at the New York Stock Exchange.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people, and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back, everyone, to NYSE Live. In just a moment here, Coastal South Bancshares is set to ring the opening bell. The firm, which operates in Georgia and South Carolina, is on hand to celebrate its recent uplisting to the NYSE. Coastal South Bancshares is the holding company of Coastal States Bank, which offers a full range of banking products and services designed for businesses, real estate professionals, and consumers. Later on this hour, I'm going to head down to the trading floor after the market opens and speak with today's bell ringer, Coastal South Bancshares CEO and President Stephen Stone. He's going to walk us through the significance of its NYSE listing and, of course, what the firm has planned for 2026 as we are underway in this first full trading week of the new year. As we get set to open, we see stocks little changed. There's a live look at that opening bell podium. You can follow along this company at the ticker symbol COSO, looking like an open with little changed on markets. And let's take a listen. All right, everyone, that's a live look at the opening bell podium. Coastal South Bank shares, ticker symbol COSO, is celebrating the open here at the New York Stock Exchange. Its CEO, again, is going to join me down there on the trading floor in just about 20 minutes. But let's talk about this market open because we do see stocks a little changed. Still, what's working in 2026 is similar to what worked in 2025 in equity trades. And, of course, investors have been adding to their positions in this new year. Well, joining me now to talk more about the economy and what is ahead is Larry Werther. He's the chief U.S. economist at Daiwa Capital Markets America. Larry, welcome.
Kristen, thanks for having me.
Happy New Year.
Happy New Year to you as well.
How is 2026 looking to you from an economic standpoint?
I think it's looking very much like 2025. The macro backdrop remains constructive. I think there's a good bit of uncertainty certainly generated by the Trump administration, but at the same time, financial conditions are expected to ease further with easing in monetary policy. And I would add that I think the economy is going to get a bit of a tailwind from fiscal policy as well.
What does this mean for Fed rate cuts in 2026?
It means there's going to be a lot of debate between now and the end of January. My base case is for 2 cuts this year, although I'm open to the possibility of more on account of expected softening in the labor market. But I think there is a split on the committee right now, and officials are pretty divided on which way to go.
So, of course, the Fed has a dual mandate: maximum employment and contained inflation, stable inflation, if you will. And we're going to get jobs figures this week. We did get ADP this morning, did show about 41,000 jobs added last month in December. The non-farm payrolls report on Friday. Paint the picture of the jobs market for us.
I would say that right now, the underlying labor market is softening, and I would point to several things. First off, if you recall Chair Powell's December press conference, he noted that the numbers right now are probably being overcounted by about 60,000 per month. We also saw the preliminary benchmark revisions a few months ago that suggested job growth through the spring was softer than previously reported. And I would also highlight that for November, the unemployment rate moved to 4.6%. So as I view the labor market, I see momentum to the downside. And I see that keeping the door open to more cuts rather than less this year.
How does this impact yields? We've seen a steepening yield curve recently, of course, with the shorter term trending down and the higher end going a bit up.
You know, there's a push and pull going on in the Treasury market right now. My base case is for further bull steepening this year. 2s10s are at about 70 basis points right now. I'd expect it to be around 90 at year end. Certainly the expectation for further rate cuts is anchoring the front end. But on the other side of the coin, Treasury is going to have to increase coupon issuance at some point. Whether or not the foreign bid remains for the back end, if that continues to materialize throughout the year, especially with Japanese yields rising, for instance, this all remains to be seen, and I think there is a push and a pull, as I said, but my base case is for ongoing bull steepening, maybe another 20 to 25 basis points or so. And we already saw a move earlier this year.
Can the consumer hold up in this environment?
Yes and no. What we're seeing right now is an evolving K-shaped consumer sector, and that's been the story for some time. Higher income individuals and households are continuing to spend, but there is some hesitation in the lower end of the income spectrum. And now, especially with the labor market softening, I think we have to be a bit more concerned about lower income households into the year. On that point, I've built in a bit of a slowing in consumer spending in the middle quarters of the year. still think we do pretty well overall with GDP and consumer spending, but we're not going to see a three-handle on consumer spending again like we did in the third quarter.
Have you seen corporate America be able to weather this situation?
Profits across the spectrum have been pretty good. I view firms that sell primarily to lower income individuals trying to tweak their guidance a little bit, but in general, I think the prospects for the corporate sector and specifically those that interface with the consumer are still pretty good.
All right, Larry Werther, he's Chief U.S. Economist at Daiwa Capital Markets America, joining me in studio. Larry, thank you.
Thanks so much, Kristen.
Great to have you.
Thank you.
All right, everyone, still to come. AI semiconductor firm DeepX is going to be among the participants at this year's CES conference in Las Vegas. And its CEO joined me here at the NYSE ahead of the festivities and explained how its so-called butter test shows how it is standing out. Then later on, I'm going to head down to that trading floor, as I mentioned earlier, speak to today's bell ringer. That's Coastal South Bancshares CEO Stephen Stone about the company's next move. Stay with us.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back, everyone, to NYSE Live. Earlier this morning, NYSE-listed Spotify announced that over the past 5 years, it estimates that its investments across its podcast ecosystem have contributed more than $10 billion to the podcast industry. Well, joining me now with more is Jordan Newman, Spotify's head of content partnership and Spotify's partner program. Welcome to the show. It's great to see you this morning over there in Los Angeles.
Thank you so much for having me. Great to be here.
Jordan, let's talk about this $10 billion milestone. How did you get here?
Yeah, well, listen, I think over the past 5 years, podcasting has really evolved into one of the most popular and influential media formats. It's really sort of the modern town square. It's where people are engaging with everything from breaking news, to wellness, to entertainment. And at Spotify, I think we've really helped transform podcasting into a global cultural category by expanding access and really building this ecosystem for creators and publishers. So, I think it's undeniable the impact that podcasts are having right now on our culture and in the zeitgeist.
Talk to me about your latest news as it relates to your creator program and how you're partnering with those out there.
Yeah, listen, we are basically expanding access to the Spotify Partner Program. So essentially what we're doing is making it easier for creators who are earlier in their journey to join our partner program and start monetizing their content on Spotify, and really helping more creators earn a living from doing what they love, which is creating content and distributing it to the millions of people on Spotify and beyond.
Yeah. So in terms of what's next, give us a sense as to what is ahead.
Yeah, look, I mean, I think we have the Golden Globes recognizing podcasts as a category. And so I think it's impossible to deny that podcasts are sort of mainstream right now. I think what we've seen over the past year is a real move to video. We've seen podcasts increasingly add a visual component. And so I think as we look to the future, you can expect to see more interesting visual aspects of podcasting. I think these are really becoming sort of the news programs, the late night shows, the conversations that people are paying attention to. And so as I look to the next year, I think we'll see podcasts become more influential. We'll see them become more visual. And I think we'll just continue to see them really being adopted by more and more people around the world.
What are some of the podcasts that have been working well for Spotify?
I'm sorry, can you repeat that?
Jordan, what are some of the podcasts that have been working well for Spotify?
Yeah, I mean, if you look at our top charts, you can see that there's a number of really big podcasts. These are creators who are now household names. I'm talking about folks like Mel Robbins, Andrew Huberman, Alex Cooper, Joe Rogan. These are people who are distributing their content to millions of people. And I think, when you watch their shows, when you're on social media, it's impossible to ignore the impact that they're having on our culture. And so I think, we'll continue to see a lot of these podcasts dominate in the next year, but also some new categories as well. I think, true crime has always been something that folks are obsessed with. We have a number of really fantastic true crime podcasts on our platform. And then I'm particularly interested in the wellness podcasts. I think people are really looking to podcasts to help them live a better life. So shows like Modern Wisdom from Chris Williamson, an Andrew Huberman show, I think are really giving people some.
You're joining us from Los Angeles this morning, so I want to talk about the latest on the ground in LA and spaces that you're creating for these creators. What more can you share?
Yeah, so we are opening up a new studio. It's called Sycamore Studios, and it's really designed from the ground up for video podcasters. It will be the home for our podcast network, The Ringer. We're also going to work with eligible creators in our partner program to record in this space. And, I think video podcasts have really come to fruition in the last year, and this space is really tailor-made to support video podcasts. It's really designed for the modern creator looking to really speak to their audience and connect with them in a visual way.
And when creators partner with you, what can the creators expect?
Yeah, look, I think we do a lot of things on our end to support creators. I think we've really made a large investment in infrastructure to allow creators to really easily distribute their content, but also monetize it. Whether that's through advertising or sponsorships. We work hand in hand with creators to really help them find their audience on Spotify. We do that by helping promote their shows, but also connecting them with other creators. I think doing so allows for some really exciting cross promotion. And so we're doing a lot to connect with creators to support them and really help them grow and monetize their audience. And certainly we're super excited to invite them into our studio space in Los Angeles, as well as other spaces we have in London and New York to record their podcasts.
Jordan, thank you so much for joining us this morning live from Los Angeles. That's Jordan Newman. He's Spotify's head of content partnerships and Spotify's partner program. We appreciate it.
Thanks for having me.
Great to have you. All right, well, AI chipmaker DeepX is among companies participating at this year's CES in Las Vegas. Its products are designed to run AI functions directly on devices like robots and drones. And its CEO, Lok-Wan Kim, shared more details with me about the work that his company is doing and how it uses the, quote, butter test, end quote, to stand out in the space. Let's take a look.
From the day one, we built DeepX by,
combining two proven success formulas that reshaped the semiconductor industry. Once a small startup, ARM, defeated Intel in 1990s by creating low-power CPUs that launched the mobile era. Similarly, DBX has focused on energy efficiency and thermal stability, the key foundations of on-device AI, where better life and reliable operation define the real-world usability. So, in these areas, DBX has focused, on achieved breakthrough technologies, gaining the global leadership. So, to make people understand this intuitively, we introduced our butter test, at CES and Computex. We place a piece of butter on multiple AI chips running the same AI workload, and every other chip, melted its butter, but only except the DBX chip, didn't do anything. So this simple task, demonstrated, our chip's excellence in energy efficiency and thermal stability. Secondly, Qualcomm executed its, global leadership by, building a powerful patent portfolio for CDMA technology. Likewise, DBX has built a foundational patent portfolio for NPU technology. According to the Forbes, DBX holds more registered U.S. patents about NPU technology than Apple, Qualcomm, NVIDIA, Intel, or ARM, with over 400 patents filed worldwide, creating a formidable IP fortress. So, now armed with unmatched energy efficiency and an unbreachable IP fortress, DBX is leading the era of on-device AI.
How has DPEX proven its technology in the global market?
So right after producing our first chip samples, we distributed them to over 300 global potential customers. And they tested our chip with the most AI chip on the market, and they found our chip to outperform others in energy efficiency, AI accuracy, thermal stability, and cost competitiveness. And our technological excellence and the unprecedented scale of our global evaluations earned DBX the exceptional global recognition. We won the 3 innovation awards at CES last year, and were named a must-see booth at this year's CES, and received Computex Innovation Award among over 400 competitors. E-Times named our first product, the best of the product of the year, and World Economic Forum in Davos invited us to lead, the global agenda on AI semiconductor, technologies, representing world, AI chip industry. Now, today, our chips are being adopted across robots, drones, smart factories, smart cities, home appliances, and many other AI-powered devices around us. Now we are collaborating with over 50 global customers, and also we have built global distribution, distribution network with 20 global semiconductor distributors, driving global expansion at a pace unprecedented for a young family's company.
What is the next major innovation that DPEX is focused on?
Yeah, on-device generative AI has become a global demand because the data center-centric model has reached its limits in energy, cost, real-time processing, and scalability. To make generative AI more accessible and sustainable, DBX is pioneering a powerful yet practical solution, enabling massive AI models to directly run on the devices. So running 20 to 100 billion parameter
generative AI models locally can reduce the data center AI traffic by over 80%, virtually expanding global AI infrastructure fivefold. So now we are completing our next second generation NPU chip design that will be manufactured using 2 nanometer technology. This chip will run 20 billion parameter generative AI within just 5 watt power consumption and 100 billion parameter model using MOE architecture. So this chip launching the next year will power major LLM algorithms such as Llama 4 Scout, OpenAI OSS, and DeepSeek on devices. For all these reasons, we are excited about this breakthrough. This chip will mark another major step toward a super intelligent civilization.
Wow. How do you view the intersection of innovation and capital, and what is the role that your company plays in that intersection?
So innovation is about making possible what others believe is impossible. When the achievement brings true value, that is innovation. DBX innovation lies in extreme energy efficiency that enables AI everywhere. So capital is the bridge that transforms innovation into real-world impact. We all have witnessed how computing has evolved from the huge mainframes to small smartphones. Similarly, AI is following the same path, moving from the data centers to devices all around us. Driven by this transition, global the market for on-device semiconductors is expected to exceed over 100 billion USD by 2030. So DBX is breaking the biggest barriers of energy, heat, and cost to make the era of on-device AI a reality. That's why global investors are recognizing our today's value and our potential for tomorrow. So, ultimately, our mission is to help humanity move towards a super intelligent civilization. So we are very excited about this future.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live, everyone. We are down here on the trading floor of the New York Stock Exchange, and earlier this hour, you saw Coastal South Bank shares ring the opening bell as equity markets opened here on Wall Street. The company up there on the podium to celebrate its recent uplisting to the New York Stock Exchange. Well, joining me now with more is Stephen Stone. He's the CEO and president of Coastal South Bank shares. Stephen, welcome to the Stock Exchange and congratulations.
Thank you. It's a pleasure to be here this morning.
Yeah. Walk me through what you're here celebrating today.
Yeah, we are here celebrating our initial public offering, which we completed this past July, and our listing on the New York Stock Exchange.
How does this open up new opportunities for your company?
Well, in a number of different ways. First and foremost, it gives us additional capital to grow. We've grown the company from about $400 million in total assets to $2.3 billion in assets today, and we've got strong aspirations for more growth, both organically and through M&A.
What does that growth look like in 2026?
Well, we're hopeful 26 is going to be another good year for us. Our trends have been pretty strong over the last couple of years, and so I would hope that 26 looks just as good.
Okay. Of course, a publicly traded company now under the ticker symbol COSO, listed here on the New York Stock Exchange. A lot goes into these big moments, and I know you have a team who worked to get you here. What more can you share?
Yeah, we're excited to be here, joined today by our board of directors, senior management, but we've got a great team that is all at home because banks are open today. So hopefully a lot of our team members got to see the opening bell this morning. We're really excited, really proud of the whole team and everything they've done. I said last night to a group of individuals, I got to tell the story during the IPO process. When we were on the road talking to investors, I told the story. They wrote the story. It's their hard work that goes into what we do every single day that gives me the opportunity to come to the New York Stock Exchange and tell this great story and bring in some new investors and keep the story going.
And what does it mean to be here at the NYSE celebrating this deal?
It's absolutely fantastic. This is a historic place. I'm honored to be here. It's really special.
Special indeed. And as we are in the first full trading week of 2026, of course, we'll wait to see what the year holds. But how is your firm positioned to weather the economy that's in store?
Yeah, well, $40 million of primary capital that we raised in the IPO really positions us rather well. We're positioned to do pretty well in a good market, in a bad market. We focus on fundamentals in banking, safe, sound practices, and so I like our position no matter what the economic conditions look like.
All right, Stephen Stone, President and CEO of Coastal South Bank shares, now trading here on the New York Stock Exchange under the ticker symbol COSO. Stephen, congratulations.
Thank you so much.
All right, everyone, let's take a look at these major indices to see how we are trading just about 30 minutes into the start of trade. I mentioned it, the first full trading week of 2026, and we have seen investors building their positions here in this new year. Major themes in 2025, like technology and AI, continue to be in focus in 2026. In fact, the NYSE is also on the ground at the Consumer Electronics Show in Las Vegas, talking to all sorts of companies, both public and private, on the ground about how technology is going to shape the year ahead. A reminder to our viewers, we're live each weekday morning from 9 to 10 a.m. Eastern on all the streaming services that you see on your screen right there. We've got a lot more in store this week, including live reports from on the ground at CES, as well as that jobs report out on Friday. Jobs in focus for the path forward for interest rates. And we'll see you back here tomorrow morning at 9 a.m. Eastern. Thank you as always for watching, and have a great day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?